broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning here in Mumbai. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, Prashant. Good morning. Good morning, Nigel. Well, lots to talk about today. Of course, the biggest cue will be HDFC Bank's numbers that come out later. But apart from that, also a lot of turmoil across the globe. So I don't know how things are going to play out, but it's going to be an interesting trading day.
At least the weather here in Mumbai is supporting, right? It's lovely. It's more pleasant than it was in December as well. And I believe, going by the forecast, that we're in for a spell of maybe a couple of weeks of good weather. So enjoy it. Enjoy it, right? I think from post 8 p.m. in the evening, it gets quite pleasant. Little chilly in the night as well for Bombay standards. Prashant, before you jump out to me. So I'm quite happy about it.
Absolutely, I agree with you. And I want to just add that air quality is also cleaned up big time. I think AQI is some 79, which rates moderate.
Finally, you can see the skyline, right?
You can see the skyline, and I would rate higher than even the slight nip, which is good. And of course, it's surprising that there's been no construction for 4 days. That is so. I mean, it's actually heartening to see if all the sort of big construction subsides, we actually will get good quality air. I mean, it's not doable, right? It's not. I mean, the reasons are visible. That's what's heartening to me. That eventually, once all these mega projects, etc., settle down, you'll be able to you'll have better air quality. That's the takeaway. Anyway, let's just circle back to what you need to know as far as the markets are concerned. So a strong momentum, right? I mean, almost a fortnight of break. And then on Friday and yesterday, markets picked up pace. And how? 450 points on the Nifty is what the Nifty has done over the last two trading sessions. It was led by Reliance Industries. IT joined the party on Friday in a big way. It continued yesterday with another 2% gain on the IT index. And there was a new sort of kid, which is the pharmaceutical space. The index was up 1%, but many stocks within the pharma space were up a lot more. I'll come back to levels, etc. Let me just quickly wrap up the global action overnight because, I mean, U.S. markets were not trading. Both stock and bond markets were shut. U.S. Treasury yields, I mean, the, government bond yields, they expected to catch up to what happened in Europe. So they're expected to open, I mean, they're set to open about 4-5 basis points higher as far as futures are concerned. Rate path expectations are essentially the big macro driver, not just in the US, but Europe. And I'm saying Europe because, I mean, we still had commentary, etc., coming through. And this is interesting. And this is straight from Davos, where the World Economic Forum is being held. One of the ECB members who's considered an ultra hawk, I mean, who basically is of the view that, we should, there's a lot more to be done, etc. He said we should not bank on rate cut at all for 2024. He was, of course, talking about what the ECB will do in Europe. But I think there is a tinge of that, a reality check in some circles in the US as well. Maybe the market is front-loaded a lot of cuts, and we will not get as many, and we will get the first cut later than what markets expected. So, that's coming out of Europe. Geopolitical sort of issues are also front and center. So, you had, a U.S. registered vessel which was hit by Houthi rebels, the Yemen-based Houthi rebels yesterday. And watch this space because, I mean, U.S. and allies have started airstrikes on what they consider are the staging areas for attacks in the Red Sea. So will this escalate? That is the big question as we go forward. U.S. presidential elections also kicked off. So that's, of course, later in the year. But these are the Republicans picking their candidate, and Donald Trump, the past president, is comfortably ahead. He's some 30 percentage points ahead of the next candidate, DeSantis or others. So he should comfortably get his nomination. At least that's what's happening in Iowa. And we'll get news flow through the course of the day over the next couple of hours. Just to circle back to the Nifty, yesterday the Nifty closed above the upper end of, there is a rising channel, and the Nifty closed above it. So that's pretty good news. The target for the Nifty, based on that extension, is 22,350. So we are not very far away, actually. With this kind of momentum, it won't take very long. On the way down, there is, of course, a 20-day moving average, but because the market is opening with gaps, and of course, there is a gap up, a big gap up, and then the market extends through the course of the day. It's kind of tough to get, use 20-day meaningfully as a support area. So use the 40 hourly exponential moving average, which stands at 21,800, which is, close about 300 points away from where we left off yesterday. Below that, the support, of course, is the 20-day, which is, as of yesterday's close, at about 21,592. The Nifty Bank also cleared two important levels yesterday. It broke above the 61.8% retracement, and it also closed above the falling trend line on that index, which means, there is real visibility and potential for the Nifty Bank to take out the last high, which is 48,636, which is not very far away, a few percentage points. On the way down, use the 40-hourly support, which is 47,781 as the support, and break only below this level, which is the 40-hourly, will indicate that maybe the up move is maturing even in the Nifty Bank. So it's constructive out there. I would only say that 440 points in 2 sessions in the Nifty, that is fast by any yardstick. You don't clock 200 points every single day. So maybe a bit of a slower day as compared to the last couple of sessions. Earnings are, of course, also going to be coming in full steam. HDFC Bank reports post-market hours today. So I think all of that into the mix as we start another session. The GIFT Nifty is indicating a 30-point lower start. Sonia.
Absolutely. So, there could be some caution in the system today for sure. One, the GIFT Nifty is suggesting a lower start, right? Not just that, the US futures are also down about 90 odd points. They weren't trading yesterday, but overnight, because of the escalation that we've seen in the Middle Eastern conflict, there is some pressure that you're seeing across the globe. This morning, you have the Asian markets that are also under a bit of pressure. So some bit of caution perhaps is needed in the system. Having said all of that, the markets are at record highs. The momentum in our own markets continues. The big cue to watch today would be HDFC Bank's numbers. In that context, we do know that the numbers could be good because, they had come out with their business update a while back. And the loan growth was quite robust in Q3. In fact, the domestic retail loan growth has been very, very strong for HDFC Bank. It clocked in excess of 111% year on year. So on that front, good numbers are expected. You have ICICI Bank in the latter half of the week as well. So these banks could be in focus. Apart from that, strong numbers from FedFina services too. So keep an eye out on that stock today. And as I was telling you, the numbers are coming in thick and fast. So once again, FIIs continue to buy in large quantities. FIIs bought over 1,085 crores in the cash markets yesterday. The only problem for our own markets is that there is some caution in the global space. There is an escalation of the conflict in the Middle East, as Prashant was pointing out. Oil prices have been rising as well. So that's one caution point. And the other thing is some of these housing finance companies could be in focus as the RBI has issued stricter draft norms for this entire space. We'll talk about that in greater detail, but that's one cue that I'm watching out for as well. So the big question, is this rally sustainable, or are we going to see some amount of trimming of positions given the kind of global uncertainty that we have on our hands? That could be the order of the day, a little bit of volatility in trade.
Well, the final tick yesterday on the Nifty was at the high point of the day. So the momentum is clearly with the bulls, and you didn't have to worry overnight about any kind of shocker coming out of the United States. So it seems, the markets took that with both hands, and that's why the close was closer on 22,100 odd. Though some of those technical factors, they're turning a little bit cautious, which I'll get to in just a bit. The Nifty Financial Services Index as well plays out its expiry, so that's going to be the mover in the second half of trade. Now, the Nifty Bank, the Nifty IT Index, and Reliance Industries, the three pillars of the Nifty, we're talking about more than 60% of the index out there. All of them, in fact, have been doing very, very well. Reliance Industries has been a rank outperformer, more than 7.5% gain in 2024 so far. And in fact, that's been the one that's holding one end up, and in fact, batting for the bulls big time. So that's been moving up nicely. What did the FIs do yesterday? Well, there was a swing factor of close to 15,000 contracts because they covered 5,000 shorts, they added 10,000 longs. So that's why I'm saying put that together. It's a swing factor of close to around 15,000 contracts odd. And now the positioning is, long positioning is at around 66%. But the put writing is getting a little bit too easy. 22,000, put yesterday, 22,100 put, 22,050 put. Well, there was a big amount of open interest out there. Close to around 1 crore shares were added out there. And the sense you're getting is this put writing is getting too easy because the PCR has moved to the upper end. Remember, when we see it move to around 1.6, sometimes you get a call for a bit of a pullback. So let's highlight some of those technical factors that are turning a little bit cautious. The PCR has moved to the upper end of the band, so that's point number one. Point number two is the FI net long position. Well, that's moved to around 82,000 contracts. That's the highest we've seen in 2024 so far, so in absolute terms. So that's another factor. The India VIX as well moved up yesterday. The Nifty moved up, but the VIX as well moved up. sometimes that's a sign to get a little bit cautious because the IVs are moving up on both sides. So that's another point that I thought I'll put on board. So for the time being, I'll give you a broader range. On the downside, going by the options data, you have the 21,900 level, 21,950 level. That's going by the options data. And on the upside, 22,300 call, 22,500 call, they have the highest open risk. So that's the broad band that we're looking at. For the second half of trade today, the Nifty Financial Services Index, that plays out weekly expiry, so that will be important. And the street will position itself for HDFC Bank's results. So that's the crucial factor. So financials and banking, well, they'll take center stage for the second half of trade. For starters, we're seeing a bit of a pullback. Let's see whether or not at some point of time this dip gets bought into. This market is trending up, but take note of some of those cautious signs as well.
Absolutely. Some caution definitely is the need of the hour, given the kind of cues that we have. But let's kickstart the show then on the equities front. We have Lawrence Belanco of CLSA who says that the Nifty's advance following breakout from the 21-23 consolidation pattern is showing its second signal of slowing upside momentum. He says the prior divergence resulted in a 2-month corrective phase that included a more than 6% correction of the September 2023 highs. As such, he anticipates another correction consolidation pattern that warns of a potential pullback to the 50 DMA at the 20,644 area at the very least. Here he says they would reassess for potential re-entry points as the original breakout from the 2021-23 consolidation pattern supports an upside target of 22,800 to 23,000. He adds Reliance Industries, after underperforming the Nifty since June 2022, has broken above its relative 200 DMA as well as the 2021-24 trading range, with the recent close above the 2585 to 2622 resistance. He says this breakout supports an upside target of 3300 to 3400. So clearly there's an upside target in Reliance, but overall he's a bit cautious on the market.
Okay, well, let's get you some money market views as well. On bonds, we have Vishal Goenka of IndiaBonds.com says that lower than expected inflation numbers for CPI and WPI in India caused bond prices to rally in the past few sessions, and the 10-year benchmark bond yield is expected to trade between 7.13 to 7.18%. He says the next significant event for short-term direction will be the end of the month Fed policy, followed by, of course, the interim budget here in India.
Well, we've got a lot of stock-specific action track for you. Get to that in just a bit in our special Top 10 segment. But for the time being, we run you through the list. We look at Jio Financial, Fed Bank Financial Services, you have PNC Infra, Nalco, Landmark Cars, Aster DM, Angel One, and RVNL. So 8 of them will be reacting to positive news flow. While on the flip side, housing finance companies and DCX Systems will be reacting to negative news flow.
Okay, well, our sort of guest on the program is a special one. James Sullivan is joining us. He's Managing Director, Asia Pacific Equity Research at JP Morgan. James, great to have you back on the program here on CNBC-TV18. Happy New Year from all of us here. So great to see you. Prashant this side. I mean, the big talking point and the unknowable in that sense is what happens to the US economy. Will we see a recession or not? The consensus is that we will not. History tells us otherwise. What's the JP Morgan view, and what does it mean for markets then?
Thanks very much for having me on the program, and Happy New Year to you and your viewers as well. I think the critical thing to focus on here is really expectations that are priced into U.S. markets relative to potential reality. The reality is that markets are pricing in an extremely aggressive view right now. You're looking at about a 70% odds of a rate cut in March. JP Morgan view is that it will be June at the earliest. Markets are pricing in over 140 basis points of rate cuts by the end of the year. JP Morgan's thinking somewhere around 120. And so you have very aggressive forecasts already built into rate markets at this stage, which we think are likely to be disappointed. The incremental macroeconomic data indicates that you're still seeing inflation at reasonable levels. If you break down the inflation view into its subsidiary components, on the goods inflation side, you've seen a significant move down as supply chain pressures have eased. However, for the first time in history, you now have medium-term problems in both the Panama as well as in the Suez Canal. Those are not going to get better in the short term. You're seeing massive increase in freight rates for a lot of routes, particularly from Asia to Europe and Asia to the United States, which will put further upward pressure on goods inflation. On the services side, you're still seeing relatively strong labor markets in multiple economies around the world, and we don't think you'll see disinflation on that side. And so the setup at this stage is potentially for a market disappointment. and for higher rates relative to current expectations at year end.
Okay, so there's a massive increase in freight rates that has already occurred, right, James, because of the escalation at the Red Sea, and now things are only getting worse. So I take your caution on board for sure. How do you think our economy would react to that? We're heading into a vote on account, and there will be a full-blown budget in July as well. Given that we have these kind of geopolitical, this turmoil, what is your own expectation from the Indian budget?
So I think the coming year in India is going to be absolutely fascinating from a macroeconomic perspective. The most important thing to watch from my perspective is the case of the missing FDI. The narrative in a lot of the popular press has been India as a prime beneficiary of supply chain relocation. And you've seen company-specific announcements out of companies like Apple that are continuing to ramp manufacturing capabilities in India. Obviously, the government's Made in India program is supportive of that as well. That is, however, not in fact occurring in the actual world. India has driven FDI of about 40 billion US dollars over the course of the last couple of years annually. Trailing 12 months is only at 13 billion, and we're looking at a best case scenario of 20 billion for the current year. So significantly below trend. That number is of critical importance for two reasons. Number one, your overall Indian balance of payments was propped up by 21.4 billion US dollars in portfolio inflows last year, the highest across global emerging markets. Strong start to this year, as you said earlier in the program, with about 1.1 billion in portfolio inflows year to date, but it remains to be seen if it can be at that elevated level for the rest of the year. And then critically, the core support for the Indian economy has really been government-driven CapEx. The central government has stepped up with a very significant CapEx program. However, it spent most of it. And if you look at the way the budget works out, federal CapEx was up 16% in the first half of the fiscal year. That implies it will only be up 1% as we look at the second half of the fiscal year. You've seen a very strong step up in state level CapEx, but that's off a very low base. And so the overall drivers of the Indian economy get very, very interesting as we look forward into the second half.
All right. Hi, James. Good morning and good to see you in. James, the last time we chatted, we were discussing about how China, well, it's been an underperformer. Economic data is not showing up. But at those valuations, maybe things are looking up. The problem is the economic data is still weak. How would you approach that market in this toss-up between India and China?
Look, it's a great question. And again, it's expectations versus reality. JP Morgan forecast for China GDP growth this year is at 4.9%. The market's only at 4.5. And so, yes, the story is not fantastic, but that is very, very well known. And investors are extremely underweight China from a portfolio perspective. So we feel as though expectations have been rebased to a level where you now could start to see some positive inflection, not in reality, but in expectations. And so we don't necessarily need to see a significant strengthening in macroeconomic numbers from here to see upside to portfolio inflows as well as GDP forecasts for China.
Okay. James, you said you're expecting net FDI to be $20 billion in 24 in India?
So the trailing 12 months is actually only 13 billion. If you look at the best case outlook for the full year, we're looking at around 20. And again, that's in the context of a trend over the course of the last 5 years of over 40 billion US dollars. And so inbound FDI is not coming. We're not seeing global multinationals make the bets that it seems like they're making if you only read the headlines.
Yeah. No, I take that point. Maybe we'll have to look at the numbers. I don't know if you, because in 23, we had an extraordinary amount of sales from, private equity, and that I think when you net out the numbers, gross inflow and outflow, maybe the outflow number was very large because of this. I'm not sure if that is a factor per se.
So the way that we're calculating FDI takes that off the table. I think that the critical thing that we're looking at from an investor expectation perspective is this belief that multinationals are keeping their powder dry until we get past the political season in India. The expectation is that if you get a reconfirmation of particularly central government policy, that you could see that influx that we've been waiting for. And so that's really what we're watching for from a second half perspective.
All right. Well, James, we'll leave it at that. Thanks a lot for joining in and giving us your view on the markets as well as on the way forward. That's James Sullivan talking about how this could be a tricky year for the global markets given the kind of escalation that we have in the Middle Eastern conflict. and the way crude has been moving up. So not too sanguine about the equity markets. Let's do one thing. Let's take a quick commercial break. Lots of stocks to talk about. There's a big listing that's happening today. There's earnings from HDFC Bank. So lots to talk about in just a bit. Welcome back. This is our top 10 segment. We talk about all the stocks that are in focus this morning, and we have plenty to look at. So let's start with Nalco. Nigel, why are we looking at that one?
Well, India's Kabul as well as Argentina's Cambian, they have signed an agreement for exploration of mining of lithium. What is Kabul? Well, it's a JV between Nalco, Hindustan Copper, as well as MECL, and Nalco has close to around 40% in this particular JV. Well, so what does this news mean? It's a sentiment positive at best for Nalco, because initially they'll focus on exploration. Mining at best will be 3 to 4 years away. But the stock will react positively because it's a positive sentiment, on the stock. Additionally, the stock came out of F&O ban, so that's another technical factor that will work out for them. So the news flow as such is just a sentiment positive, but because of the technical factor as well, you'll expect the stock to open up in the green. By the way, yesterday, it ended at the high point of the day.
Nigel, we'll watch out for that one. A big 8% move yesterday, and I think
3%.
3% up yesterday in trade out of the F&O ban, as Nigel pointed out. Housing finance companies at the margin, the new RBI circular is a bit of a negative. Abhishek is here to explain what the RBI is saying here. Abhishek, morning.
Morning, Prashant. So RBI has tightened up, regulatory, supervisory over HFCs. So RBI has issued a draft circular to align norms of housing finance companies in line with NBFCs. So proposed changes are they will maintain 15% of deposits in liquid assets. It was at 13% right now. Deposits can be only 1.5 times of your net owned funds. So it was around 3 times earlier. So deposits maturity has been capped to 5 years or 60 months. Earlier, it was a maturity level of maximum of 120 months or about 10 years. So they must obtain investment grade credit rating once a year. That's become a compulsion. And apart from that, they have to take board approval for investment in unquoted shares of another company which is not your subsidiary. So value of investment in AIF, that is alternate investment fund, in excess of 10% should be from the net owned funds, and it should be reduced from the net owned fund calculation as well. So for this, minimum 50% of fund in AIF, that is alternate investment fund, must be from HFC. So just point in case IFL, HFC, they have in their housing finance about 160 crore of investment in AIF. They have already disclosed that about 116 basis point is the impact from RBI ruling. So we will have HFCs in focus today, given the fact that PNB Housing Finance, Canfin Homes, LIC, IFL Home Finance could be under pressure in trade. Back to you.
Okay, Canfin Homes, LIC Housing, PNB Housing Finance, right? A couple of the stocks that you're looking at. There could be some pressure there as the RBI has tightened norms. But I guess in the larger scheme of things, it's always better for the industry. But Jio Financial is also something that you're watching today. Abhishek, how did it look?
Well, the numbers have come in, and there are we have to take into account, given the fact that in Q2 they had one-off dividend income. Total income is at 413 crore versus 391 crore in the previous quarter. Interest income is up to 269 crore versus 186 crore in the previous quarter. Now, profit X of associate and JVs is at 227 crore versus 233 crore in the previous quarter. They held a con call also. Con call highlights are that management sees large opportunity in lending, calibrated approach to unsecured lending. So Jio Financial will focus on secured lending. In that, they will look to launch a DAS, that is device as a service, involving air fiber, phones, laptops, supply chain financing, loan against shares, and home loans as well. In unsecured, they would be focusing on personal loans and consumer durable loans as the key products. So they will revamp the digital saving bank account within the payment bank. A soft launch of debit card is also seen in the near future. Insurance tie-ups have increased in Q3 FY24. Back to you.
Okay, Fed Bank, FINA also came out with numbers. Abhishek is here with details on that one as well. Abhishek.
Strong numbers coming in from Fed Bank. The disbursals are up 23.5% YOY and about 14% sequentially. AUM growth is pretty robust at 34.5% YOY and about 6.8% sequentially. Asset quality has improved. Gross NPA ratio is down on a sequential basis. NII growth is at 31% YOY and about close to 10% sequentially. The provisions have increased on a sequential basis by 53%. However, the PAT reported has grown by 27.8% YOY and about 13.2% sequentially. The only small negative is the spreads, which have declined by 10 basis points on a sequential basis, but they remain strong at 8.7%. Back to you.
Okay, you can catch the management as well of Fedfina Bank at 9 a.m. on Bazaar today, so not too far away. But DCX Systems is the other stock that we're looking at this morning. Vivek has his eye on it. Vivek, why are you doing that?
Well, good morning. Large fundraise coming in as far as DCX Systems is concerned. So the board has approved the fundraise via the QIP route. The floor price works out to 358 rupees a share. But as per the term sheet that we saw, the indicative issue size that the company is going is close to 500 crore, a 300 crore base size, and a green shoe upsize option of another 200 crore. The indicative issue price is at 341 rupees a share, which is a further almost 5% discount to the SEBI floor price. So what is the dilution? Slightly above 15% dilution of the existing equity is what the company is looking at, going with the red on this name just due to the large discount that has been given to the current market price. But the stock has been a significant outperformer in recent times.
Got it. Okay, all right, Vivek, thanks for that. But Vivek, also tell us about PNC Infra.
Well, very interesting deal as far as PNC Infra is concerned. This particular trend of infra companies going ahead and bunching up their tolling assets and selling it to an InvIT continues. So what PNC Infra has done is that they have divested the equity stake in 12 road assets. This is for a total enterprise value of slightly about 9,000 crore rupees. So this particular divestment has been done to Highways Infrastructure Trust, which is an InvIT, and this particular stake is completely divested to them. Highways InvIT is actually one of the sponsors for that is the KKR fund. So this particular assets comprise of 11 national highway HAM assets as well as one state highway BOT toll asset. Now, what's actually happened is that the equity value for this particular deal is at 1.7 times at 2,900 crore versus an investment of 1,740 crore by the company. So positive deal over there for the company. Along with that, remember, 1.7 times equity is slightly higher than the typical valuation at which the deals happen in this particular space. With 1.5 times is where the typical valuation happens. So PNC Infra, watch out for the name. A good asset divestment at strong valuations.
All right, thanks a lot for that. I'm also watching out for Landmark Cars. I expect the stock to be in the green after a very good update that they gave in this quarter. They reported their highest ever quarterly pro forma revenues in Q3. They mentioned that the reason for that is because the festive period was very good. There were a lot of new model launches and they had new brands and outlets that improved supplies as well for them. The after-sales business also continues to be very robust. So let's just look at the numbers. Total revenue growth came in at 8% year-on-year at a little over 1,300 crores. The after-sales services revenues went up 16% year-on-year. The base is slightly small over there, about 220 odd crores. But vehicle sales, which includes their agency sales, went up 5.5% year-on-year at 1,051 crores. So clearly, the premium end of the market is growing quite well. They also said that they have been able to meaningfully reduce their inventory, which is a positive thing. So I'm going with green on this stock.
Okay, green on Landmark there. And Ekta joins us to tell us about Aster DM. They had done that big deal and we're waiting by for clarity on dividend, and that's come about. Ekta, go ahead.
Thanks for that. Well, just a quick reminder, Aster DM sold its Gulf business to Fajr Capital and the promoters for $1 billion. They had a board meet on the 15th of Jan to discuss the progress of the transaction. The board was briefed that there is satisfactory progress on conditions and they aim to complete the transaction soon. Now, the board has said that they are desirous to consider distribution of 70 to 80% of upfront consideration of $903 million as dividend to shareholders. The consideration is in the range of 110 to 120 rupees per share as dividend. And that will probably be, maybe we could probably see an upside on the stock, though we knew that they will be aiming for dividend distribution because the promoters will be funding a part of their transaction through the dividend that they receive from this. Now, separately, the board also took note of certain questions received from shareholders, including proxy advisory firms and the responses by the company. So the company did provide clarifications, explanations on the valuations, the transaction that it did not involved the sale of DM Medicity, which is an Indian arm of the company, non-compete, medical value travel agreement, promoter family participation. So maybe there could be upside on the stock on account of these factors.
All right, Ekta, thanks very much for that. More stocks with news flow. Upasna is here with that list. Upasna.
Well, first up is Angel One. The company has recorded strong client addition and commodity market also continued to outshine for the company. The company has recorded highest ever client addition in the quarter, which was up almost 16% sequentially. In terms of client base, that also expanded 14% sequentially. The average daily turnover saw an uptick of almost 21% on quarter-on-quarter basis, and revenue was flat for the quarter, up almost just about 1% sequentially. PAT was down almost 14% on quarter-on-quarter basis. Now, talking about the turnover market share, the equity turnover was up 62 basis points, stood at 26.8%. F&O was up 62 basis points, stood at 26.9%. And commodity, as mentioned earlier, clearly outshined with an uptick of almost 212 basis points, stood at 58.8%. Well, next up is RVNL. The company emerges as the lowest bidder for 251 crore worth power transmission project in Jabalpur, Madhya Pradesh.
Well, let's just recap all the positive news flows coming in from Jio Financial, Fedbank, FINA. You also have the PNC Infra, Nalco, Landmark Cars, Aster DM, Angel One and RVNL. While stocks with negative news flow today, housing finance companies, of course, may be some pressure there, you never know, and DCX systems as well. But all eyes are now on what's happening with the Houthi rebels and, all the escalation as far as the Middle Eastern conflict goes. Things at the Red Sea have not gotten any easier either. Crude prices have spiked up overnight. Manisha Gupta is here with a roundup of all the action there. Manisha, what's the latest?
Oh, well, yes. The crude oil price is trading on the higher side of the range, but we haven't been able to cross above $80 very successfully, and that is because there is growing oil production in the non-OPEC countries and the Chinese demand still weaker, and the China monetary policy yesterday did not move at all. But the markets are eyeing the Middle East developments, especially as Houthi says that their movement will expand to targets in Red Sea. More oil tankers are now steering clear of Red Sea. And apart from that, the Libya protesters also have threatened to shut 2 more oil and gas facilities. This is after shutting 2 facilities in the previous week itself. So we are looking at higher prices when it comes to crude. Also, strength is continuing in case of zinc prices. This is after Nyrstar has suspended zinc smelting at Dutch plants. So supply concerns coming back in case of zinc. But the other metals have seen a bit of a pressure building up with no action from China, strength in US dollar. So you have the steel rebar trading at a 2-month lows and iron ore trading at a 6-week lows as we start yet another day in Asia today.
All right, Manisha, thanks very much for that. We'll come back to you for more. But for now, the big commodity oil is not reacting in any significant way at all to that attack which Manisha was talking about. We'll take a very quick commercial break here. On the other side, Hemang Jani will join in for some specific stock talk. Lots to discuss. Stay with us.
Pooja, you...
Welcome back. Hope you're having a good morning. Well, we've got plenty of earnings that came in overnight. So let's get in Hemang Jani, who joins us to help us out with some analysis on some of those numbers. Hi, Hemang. Good morning, and thanks so much for joining in. Well, I wanted your view if you're tracking this one. Angel One, well, it came out with a set of numbers. Or if you could tell us on Landmark Cars, they came up with a quarterly update and that premiumization theme is playing out very, very well. A view on both or either of them?
Yeah, good morning, Naina. Thanks for having me. I think Angel One numbers have been in line with expectations. What is worth noting over here is that the way the entire ADTO has panned out, both for options and for the equity segment, is quite significant. We've seen almost about 20% kind of a month-on-month growth also in the retail number of accounts. So I think when you look at Angel One, the way they have gone about, gaining the market share across cash, F&O, and the fact that the retail client acquisition momentum is strong. And this will be one pure play, listed entity in terms of the discount brokerage where the size is huge. So I think this should be part of the core holding. We have a positive view on Angel One.
Okay, that's on Angel One. Got it. I also wanted your thoughts on the entire housing finance companies, that whole list. The RBI has come out with some draft norms. I wanted to understand from you what the implications of this would be on the housing finance companies.
Sonia, I think I have not read the draft norms as yet. From a quarterly number standpoint, we feel that housing finance companies would report about 18 to 22% kind of pre-provisioning profit growth. And LIC housing is something that we have been liking a lot. And we think that this quarter, it will report the highest growth when it comes to quarter-on-quarter pre-provisioning operating profit.
Hemang, yesterday we talked about Reliance and we talked about, what's happening in IT services and pharma joined, but the public sector pack continues to fire on how. It's that same list, IRFC and RVNL and IRDA, SJV and Engineers India, MRPL. The PSU index itself was up, PSC index actually, was up 2.5%. If you have a PSU fund or something, great, but these individual moves are just so sharp and almost non-stop. What do you do here?
I think, Prashant, the run-up has been quite sharp, and it's not as if that they are going to come out with very different sort of earnings this quarter. I think it is more to do with the momentum. It has more to do with the less participation or under ownership when it comes to large institutional investors. I think it's a great momentum play, be it railways, be it defense, be it public sector banks. So though we may not like the sharp run-up and we may not really like the valuation that which some of these companies are quoting at, the fact of the matter is that they are providing great trading opportunities. So specific names that we personally, our company likes are Bank of India, also Bharat Electronics, the defense, and Hindustan Aeronautics. These are the pockets where we have a positive view.
All right. Hemang, I wanted to ask you about Jio Financial Services. Last few days, it's been doing quite well. Business is yet to shape up properly, but they have that 6% stake in Reliance Industries, and Reliance Industries has been looking very, very strong. So how do you trade this, in terms of Jio Financial Services? And the thing in the last 5 days or so, it's seen a bit of a good up move.
Absolutely. I think, Nigel, more than the earnings, where a large part of the growth has come from the interest income, what really market wants to see is their offering on the unsecured piece, the way they have built their technology stack, and also on the logistics solution. So I think people are taking maybe a 3-year kind of a view, and once the products are rolled out and the traction is visible in the numbers, that is where you will see the comfort. But yes, from a 2 to 3 year perspective, this continues to look like a strong allocation from a NBFC perspective.
All right, HDFC Bank is the one that's going to be on everyone's radar today with the numbers. Expected to be good. We already have their, business update. So do you expect incremental gains on the stock if the numbers turn out as the update suggested?
So it's been a relative underperformer, Sonia, but I think, from a valuation perspective, from the stability perspective, it continues to look quite attractive. When we look at the previews, people are always talking about the growth excluding HDFC in terms of NII or net profit, etc. But I think on a standalone basis at these valuations, almost about 2.6, 2.7 price growth, it looks quite compelling to us.
Hemang, the other one I wanted to just touch upon is Polycab. It moved up 6% yesterday. A sharp 3% move actually came in the last 1 hour of trade. Numbers, by the way, are on Thursday this week. What are your thoughts here, Polycab?
So Polycab, I think, this entire controversy around the tax evasion has not gone down to where, though it may not be there in the minds for a longer time. I feel that these valuations are way too high for the wire and cable companies. Even if they are growing at let's say 16-20%, look at the sheer market cap and the valuations. So I would certainly want to stay away from it. We have many pockets in the large caps, be it IT, be it some of the names like Reliance, banks. So would rather want to participate over there.
Okay, all right. That's on Polycab. Got it. That stock has lost quite a bit, but it's also, there's some brokerages that are also positive on Polycab. So let's see how it goes. Results coming out on Thursday. But the markets are all set to open in a bit. Anuj is joining in now for a quick trade setup. Anuj, hi, good morning. Now there's a little bit about amount of caution in the system, right? With the Middle Eastern conflict, with the way crude is rising. Are you starting to get cautious as well?
Well, Sonia, good morning. For the first time, actually, in the last 3 months, I am getting a bit cautious, but I'm getting a bit cautious because of market internals. I focus on that and not really the news as much. And my belief is that, staying near the exit door perhaps won't hurt you a bit. You don't want to be partying hard and then ending up paying the bill. You want to perhaps sneak out a bit before the party actually ends. 563 BSE stocks are at new high, 16 stocks at new low. Now, anecdotally, this number, whenever it hits 600, whether new highs or new low, the markets normally make a bit of a top or a bottom. So again, no harm in missing the last 5% of the rally because, from these levels, there's a risk of capital loss. Forget about, protecting your profit. So that's one reason that I'm slightly cautious. Of course, for the day, the biggest skew is going to be HDFC Bank's numbers. The quarterly update was strong, so let's see. There should not be any problem with the numbers. There's Fin Nifty expiry today and Bank Nifty expiry tomorrow. That's important because the Bank Nifty is within 500 points of new highs, but this was a level from where last time it had a big slip. So that's why you want to watch out for that. Couple of more things in trade setup which are giving you a bit of a caution. First is long positions in index futures. Net, there were 15,000 longs which were added in trade yesterday. And if you look at the put call ratio, that's gone up to 1.52. There's 16 stocks in F&O band. So all of these makes you a bit cautious. Now coming to the Nifty levels, support zone is 21,950 to 22,000, and then below that 21,750 to 21,900. And on the upside, the resistance comes in at 22,100 to 22,200 based on the options data. And then 22,250 to 22,325. I think it's the Bank Nifty which you need to keep an eye on. 48,250 to 48,350 is the first resistance, and then 48,400 to 48,600. And the support levels will also come for you on the screen as I'm watching out for them.
All right, Anuj, thanks very much for that. So that's the setup today and a slightly medium-term view as well. We'll take a quick commercial break here. Sudarshan Sukhani will be with us, so will Shrikant Chauhan. Both will join in with their technical trading ideas. Stay tuned.
इस पल को मुमकिन करने के लिए
Welcome back. 11 minutes to go for the pre-open session. Let's get our technical experts in. Sudarshan Sukhani and Shrikant Chauhan are with us with what they're making of things. Gentlemen, good morning. Good to have both of you here. Thanks very much. Sudarshan, the pace is maybe a little unnerving, but 450 points in 2 days flat on the Nifty. This morning, I mean, if you look at what the rest of Asia, etc., is doing, there's a bit of, seems like a bit of risk aversion. For the day, what's the setup?
Yeah, good morning. For the day, the setup is that we can expect a process of consolidation. As you said, it's unnerving. The markets cannot theoretically go up like this every day. I think we'll see consolidation, choppy market movement today. So inside and bull market, if we see a choppy market, condition, then the trade is to buy on a sharp dip. Even today, there is no short selling. You just wait patiently, get sharp dips, go long, whether for an intraday trade or a carry forward, that's your choice. But still you have to buy and then on a sharp dip.
All right, got that. So continue to buy, but only if there's a sharp dip. Shrikant Chauhan is also with us. Shrikant, now the market is starting to get a little nervous, right? Perhaps because of what's happening across the globe. Would you use, if there is a dip, would you use it as an opportunity to buy, or do you think that this market has become a little overstretched now?
Yeah, good morning, Sonia. Good morning, Prashant. See, like markets are not nervous, but I think they are very close to their important resistance level. And in the short term, we saw excessive rally in almost all the index heavyweights. So because of that, we are very close to the overbought level. And in case if there is any correction, then again we are expecting market to come under some buying pressure. Like yesterday also, there was some correction during the day, but before hitting to the important supports, it again recovered back and closed at the highest point of the day. So today, in case if there is any correction in the market, then close to 22,000 or maybe 21,950. Between this level specifically, we should look for adding some long positions with a stop loss around 21,900. We are expecting this market to move towards 22,200 or 22,300. This time the bank nifty is also supporting, and there also we are expecting 48,600 in the near term.
Got it. Okay, all right. Hi, good morning, gentlemen. Shrikant, you go first to tell us individual stocks as well that you're looking at.
Yeah, there are like number of companies which are very close to their important breakout levels. Specifically BHEL, which is currently trading around some 204, 205. There we are expecting stock to move towards 215 because it is very close to its previous swing highest levels. Here we can keep stop loss around 197 for the same. We also like Gujarat Gas, which is consistently forming higher top, higher bottom formation on daily and intraday basis. Based on the formation, here we are expecting stock to move towards 575. So Gujarat Gas is also a buy around 540 with a stop loss at 530. And finally, from the railway pack, we like Titagar Wagon, which is around 1,050, 1,040. So there also we are seeing some rectangle sort of formation. From here, the stock can move towards 1220, 1250 sort of level. So between 1,050, 1,100, we should look for adding Titagar Wagon with a stop loss at 1,000 on the downside.
All right. Those are individual trades from Shrikant. What about you, Sudarshan? What's on your plate?
It's mainly buying. Lupin is a buy. It's in a trading range after a big rally. Buy with a stop under 1395. Titan, which is making those new highs, is on the verge of breaking from a consolidation. Buy with a stop under 3720. Naveen Fluorine is my only intraday short. The stock has been in a bear market in this environment, and that's saying a lot. So intraday short with a stop above 3580. And PFC is going through a process of consolidation. I think it's a positional buy, intraday buy, both. Buy with a stop under 399.
All right. More stocks coming your way, gentlemen. But for now, we'll leave it there. Thank you very much for joining us with those trades and, of course, how you're viewing the Nifty and the Nifty Bank. We'll take a quick commercial break here. The pre-open will be with us. We'll also have the management of Fed Bank Financial Services. We put the focus on the third quarter earnings. Stay tuned.
Co-powered.
Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. Well, for now, we have Manoj Muralidharan, Vice President Derivatives at Religare Broking, who joins us now to give us his views on the F&O market. Manoj, hi, good morning. This is a tricky market, right? At this juncture, are you a bit cautious? And if yes, what are the stocks that you're looking at now, and what's the overall trend on the index?
Good morning, Sonia. Sonia, I guess this is a market which is led more by liquidity and the sentiment that we have for the impending event which comes in. And needless to say, Jan was the first month, I believe, in the last 2 years where the Nifty started with a positioning on almost 1.25 crores in terms of open interest, which usually is around 80 to 90,000, and then we have some short positioning. So maximum long positioning along with the cash position that we are seeing from both the FIs and DIs. So we believe that this has more room on the upside. At least at 22,300 in the next short term is what we are expecting, and a good support at somewhere close to 22,000. So at least intraday specific, I believe that 22,030 to 22,050, that's the support for the Nifty futures, where you can volunteer a long trade or buy a call option of that strike, and the target can be an ambitious around 22,200. Now, positional, we believe that, yes, it is always when the banks help the Nifty, we see this upside sustain, and the Nifty has a rally which usually lasts. But then if there is a quant analysis that runs, we are almost at a ratio of 2.19 if you simply divide the bank Nifty by Nifty. And this has a support somewhere close to 2.16. So some underperformance from the banks in the next maybe a fortnight or 20 odd days is very much possible. And after that, we would expect that the Nifty might get into a further upside. So the positional view is Nifty has upside maybe at 22,500 to 600, at least for the short term, and the 18th expiry, 22,300 would be the target that we have.
In terms of specific stocks, what's on your list?
Right. We believe that, the GIFT Nifty is a bit negative, so a flattish opening can be expected. So a better way to trade such a market is to look into the weighted average price of the previous day. That's a good way. You can continue the long side. So NTPC tops the list. 314 to 315 is where we recommend buying that with a stop loss of 307 and a target somewhere close to 326 on that. India Mart also wait for a dip somewhere close to 2610 to 2620. That becomes a buy with 2590 as a stop loss and 2660 as a target. Both these stocks we recommend buying in the cash market.
All right. Let's do one thing. Thanks a lot, Manoj, for that. That's Religare Broking with their views. Let's get you some top corporate voices from Davos now. Honeywell CEO Vimal Kapoor, in a conversation with Shireen, said that the doubling of their India business is bound to happen in the next 4 to 5 years. Listen into his outlook for India and the opportunities there.
What could it potentially mean in terms of business in India? What could the size be over the next few years, given the fact that you've got an economy that's growing, and you've also got on each of these fronts that you've identified as growth engines, growth coming in?
So look, I mean, first of all, our doubling our India business in the next 4 to 5 years is imminent. I mean, that's bound to happen. But exciting opportunity for us is not only the domestic business growth, but how do we source more from India? That's something which is new. As made in India is becoming more prominent, our ability to source from India is going to become a critical vector. We set up a new manufacturing facility for chemicals manufacturing in Gujarat. We started it last year. 100% product is bought by Honeywell. So it's made in India for the world, something which the country wants to promote, and we are the shining example of that. So I will see for Honeywell, India has 3 legs: the domestic business, which we will grow it very rapidly. We have been using engineering service capability in India for 30 years. We started in 95. And now the sourcing, which is a relatively a new engine, whether it's mechanical, product, chemicals, and others, I see a huge potential on that in it.
Okay, that's Honeywell, but my colleague Shireen also caught up with Mr. G.V. Prasad, a co-chairman and managing director at Dr. Reddy's Laboratories. They spoke about the impact of digitization and generative AI on the pharmaceutical space. Listen in.
What will be the big trends that could shape the pharma industry in 2024? Everyone's talking about generative AI and the fact that it could be a potential game changer as far as the healthcare industry is concerned, bring down the drug development and drug discovery time significantly. How are you reading that?
So it's early days, but I'm spending a lot of time, including here, to understand where this is going. AI is certainly a force multiplier. It is, I would call it, it amplifies human capability. So we are seeing some benefits already in our own organization in terms of use cases, not in drug discovery or innovation yet, but in process development, in R&D productivity, in manufacturing productivity. There is some impact, but I think the best is yet to come. The potential looks great, but companies like us have to learn this little at a deeper level. From a digitalization front, we are in a very good place. We have invested in digitalization over more than a decade and connected all our value chain activities digitally. Now we have all that data. We're now investing in creating machine learning algorithms, AI-driven models, and of course looking at generative AI, but that is at a very early stage.
All right, time for our next corporate interaction. Fed Bank Financial Services reported a strong set of earnings in Q3. This was on the back of robust AUM growth and strong disbursements. Anil Kothuri, who is the Managing Director and Chief Executive Officer at Fed Finance Services, joins us now to talk about that. Anil, a very good growth in disbursement. It's almost a 24% growth year on year. Is this something that you can sustain in the last quarter of this financial year? And what do you think you could end the year with in terms of disbursement growth?
Good morning. So the last quarter of the year is normally the business end of the year. So that's when activity peaks and there is seasonality. So disbursements increase in the last quarter of the year. So while we did have a robust Q4 in the previous year, I believe that the percentage growth is sustainable for the quarter to come.
Okay, so the percentage growth is sustainable, you're saying. So you can see an excess of around 23-24% growth in disbursements even in Q4. I also wanted to talk about your AUM growth. It was robust, but you also raised funds, right, in the quarter gone by. Can you tell us a little bit about what the reason for that is? And also going forward in FY24 and FY25, what are you looking at as an average AUM growth?
Yeah, we came up with an IPO in the quarter gone by. We raised 600 crores of primary capital. That's used to augment our tier 1 position. So which is why our debt equity came down from close to 5.5 to almost 3.5 right now. Okay. So that now is ammunition for us. We can lever more and we can pursue growth for the coming, let's say, 2 or 3 years. I believe that an AUM growth of about 25% from here on is sustainable on the base that we have. And that is what we will pursue over the next couple of years.
All right. Hi, Anil. Good morning and good to see you in. So from around this 10,700 crores, in the next 3 years or so, where do you see the AUM number headed? And also, I think there was a credit rating upgrade, in the past quarter. So what does it do to your spreads going ahead?
So yeah, we've received a rating upgrade. Okay, CARE now rates us AA plus. Okay, this is up from AA, and about a year ago, 13 months ago, we were AA minus. So in about 13-14 months, we've got 2 rating upgrades, AA minus to AA, and then on to AA plus. Parallelly, CRISIL has rated us AA positive, which is AA with a positive outlook. So that's a first. All of this happened in the first 10 days of January. Okay. And I believe that this reaffirmation of our strong profile and actually an upgrade will stand us in good stead when it comes to our borrowing costs, and that's an advantage that we hope that we will carry into the year ahead.
Quantify that. How much has your borrowing costs come down by because of these 2 rating upgrades, and also the AUM number? Say in the next 3 years or so, you'll be closer to that vicinity of around 18,000 crores on?
Yeah, so since the rating upgrade is about a week old, we can't yet quantify what there has been no impact so far. But I believe that whether it's borrowing from banks or in the markets, we should see some benefit in terms of borrowing costs. Now, in terms of AUM growth, yeah, 25% compounding over 3 years should take us beyond the 18,000 crore rupee mark.
All right. Anil, hi, good morning. So this cost of funds could be 1,500 basis points, right? Roughly. I mean, we've seen this happen with other institutions as well. And over a period of time, it kind of amounts to that much. Would I be wrong in the ballpark?
Well, I hope you're right. But having said that, our costs are currently AA kind of cost of funds. Also, we have the benefit of having a strong parentage. So our cost of borrowing is anyway close to a AA positive kind of cost of borrowing. Okay. So from here on, the gap between us and AAA is about 40 to 50 basis points. And I hope that some bit of it should get bridged in the coming year.
With this. Anil, talk about mortgages a little bit, because that is the segment which has seen the fastest growth, the strongest growth. Will that continue, and what are you doing there which is allowing you to register this kind of growth?
Yeah, we offer mortgages in 180 branches across the country. We're present in 17 states and union territories. So all these branches have got opened over the past 5 years. In the year gone by, we've opened 50 branches. So we moved from 130 to 180 in terms of branches. So each branch then does something like 1 crore rupee of business every month. And that's how this business builds up. In terms of the market, the segment that we cater to, which is the emerging self-employed customer, is hugely underserved. and demand quite significantly outstrips supply. So that's a gap that we are trying to remedy. So that's the reason we're seeing strong growth in the mortgage business.
Okay. Your asset quality actually quarter on quarter has seen an improvement. Do you expect further improvement in the asset quality? And also, can you give us an outlook on what the credit costs would be for FY25 and by the end of FY24 as well?
So yes, we've had a good quarter as far as asset quality is concerned. Our absolute level of GNPA has declined by about 4-ish%. You know, this is an absolute rupee number terms. But the credit cycle is currently an enabling one, a benign one. So we believe that we should be able to take advantage of that in this quarter and the year ahead. We are comfortable guiding an average credit cost of about 80 basis points on a through the cycle basis. So next year, I think we can go with a number of about 80 basis points.
All right, we leave it at that. Thanks a lot for joining in and speaking to CNBC-TV18. That's FedFina Services talking about their business as well as the way forward. By the way, let's just get a quick look at what's happening in the market. So the pre-opening rates have settled in right now. And as we were telling you earlier, there could be a little bit of pressure kicking in, some volatility perhaps because of what's happening globally. The market is flat with a bit of a negative bias. And in terms of individual stocks, lots of stocks in focus this morning. Of course, HDFC Bank would be top of mind given that numbers are coming out later in the evening. Bharti Airtel is up about 0.5%. And on the downside, the biggest loser actually is Eicher Motors. I'll tell you why. Morgan Stanley has downgraded Eicher Motors to an underweight from an equal weight. They expect a 17% downside on Eicher Motors from the current market price. And there are a couple of reasons that they have given here in their report. They expect the growth to slow down. They're saying there's a limited margin upside, rising competitive pressures. And in the premium motorcycle segment, things are getting very aggressive now because of two players, right? There's the Bajaj Triumph bike and there's the Hero Harley bike. There have been new launches from these players who are not only looking at a global focus, but are very strong in the domestic market as well. All of this is putting pressure on Eicher Motors, and aggressive scale-up of these models could pose a risk to the market share. So there is a downgrade coming in from Morgan Stanley, and hence the stock is under pressure. But Indus Tower and Bharti Airtel are also in focus. Rima is here to tell us more about that. Rima.
Thanks so much for that. So JP Morgan today has upgraded Indus Towers to an overweight and it's upgraded Bharti to a neutral. The report is titled "The Clouds Are Clearing." Here, I think the clouds they're referring to are, higher capex and the lack of tariff increase. So the company, JP Morgan, goes on to say that Bharti and Reliance Jio accelerated their 5G capex spend over calendar year 22 and 23. But now they appear to have reached all the initial targets in terms of 5G penetration and rollout. And therefore, the capex spend for both these two companies, Jio and Bharti Airtel, will moderate starting this year. Secondly, we haven't seen a tariff hike by the companies over the last, 2.5 years. And according to JP Morgan, after the elections, we could see the telecom companies go ahead and raise tariffs. Their expectation will be a 15% tariff hike. They don't think it's going to be as high as 20%, which was the last tariff hike, because the market may not be able to digest it. So Bharti Airtel has been upgraded to a neutral on a better than feared capex, resumption of price repair, i.e. a tariff increase that can drive up return ratio and hasten their deleverage, and Air Fiber, which is, fiber to the home, which is fiber, Wi-Fi at home, but via a dongle, has a very potential large total addressable market, though I don't think as of now it contributes meaningfully. The reason for Indus Tower's upgrade is moderating capex, which increases the dividend visibility. So the dividend yield, according to JP Morgan for Indus Tower, could be about 8 to 11%. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, let's hop across to Nimesh. He's joining us with that standard brokerage call. Nimesh?
Hi, Nigel. So today's standard is on Syngene. UBS has today downgraded the stock to sell from buy, and they've cut the target price sharply to 700 versus 875 earlier. Now, they believe that there is a challenging global environment as well as risk to the earnings cut, which has led to this downgrade. Now, earlier thesis of easing headwinds for the company's discovery and dedicated segment, which accounts for nearly 60% of the revenues, that is not playing out as of now for Syngene. Also, there is subdued VC funding globally, as well as a lot of the global pharma players are going to face challenges in 2024. In fact, even the company's own performance has diverged versus the other CROs, suggesting headwinds for the company going forward. So on back of all this, they have downgraded the stock to sell now. They believe that brace for a very soft second half FY24 and uncertainties in terms of guidance for FY25. So In back of all this, a big downgrade to sell now from buy for Syngene, and UBS has cut the target price now to 700 versus 875 earlier.
All right, thanks a lot for that. I think we have less than a minute before the market opens. The pre-opening is indicating a flat start today, so let's see how it goes. Plenty of stocks will be in focus. Looks like the entire auto space could be under pressure this morning. So not just Eicher Motors, but Hero MotoCorp also under pressure. And some give back of positions from the IT space. Tech Mahindra, Infosys, etc. are under a bit of pressure. Reliance ahead of its numbers, little bit of give back. See, we're looking at some amount of profit taking perhaps because there is this Middle Eastern conflict which is sort of taking center stage now. Most global markets are under pressure. Freight rates are going up. So all of this will definitely impact industry, and it's having a bit of a rub-off impact on our own markets as well. On the upside though, Nestle, JSW Steel, BPCL, Hindalco are a couple of stocks that could be batting for the bulls this morning. And in terms of stocks that are in the news, IRFC has been moving with quite a bit of strength. Nalco, as Nigel has been telling us for a while, and a couple of the other names as well. Zomato, by the way, looks like it could put on some more weight this morning. So let's just wait by for the first tick on the index. There it is, down about 25 odd points. The sensex is down about 80 odd points. So some bit of, trepidation in the market, if you'd want to call it that. The top losers, Eicher Motors down about 1%, Hero MotoCorp down 0.7%, and then you have the IT names, Tech Mahindra, Infosys in the red, LTI Mindtree as well, down about 0.5%. Reliance ahead of its numbers on Friday is just gravitating around that 2,800 mark, and TCS, Britannia, Tata Steel are also under a bit of pressure. What's looking good? Bajaj Finserv is up about 0.5%. You have Bharti Airtel, that's up almost 0.3%. JSW Steel, ONGC, Tata Consumer Products, Power Grid, HDFC Life and M&M are a couple of other stocks that are trending in the green. The mid-cap index is actually having not a bad day, so it's up about 110 points. Slightly outperforming the frontliners, so that's, I guess, a good thing. The market breadth is also not bad at all. 1,200 stocks on the advancing side. So let me hand it over to Nigel to give us the rest of the update. It's flat for the frontliners, but there is some action in the broader market.
Well, that's right, Sonia. Big action, actually. Just take a look at a few stocks out there. You had PNC Infra, they have divested stake in 12 road assets for an enterprise value of 9,000 crores. That stock is up and about in today's trading session. You have Nalco, they have the JV that they are part of, and Argentina's Cambian SE. They have signed an agreement for lithium exploration and mining. So first they'll have to explore, hopefully they find something, then they can mine. But the companies that are part of that particular consortium, which is Kabil, is Nalco as well as Hindustan Copper. So both of them are higher in today's trading session. Tourism finance, yesterday there was a large trade that took place. A large seller got out of the way. So that's why, in fact, that stock as well, after being up close to 20% yesterday, it's up another 6.5% in today's trading session. IRFC is up close to 7.5% as we speak. So that stock is doing very, very well. And to name a few more names, Geo Financial, a little under the weather, I think, post those numbers that did come out. Landmark, well, they have delivered the highest ever quarterly pro forma revenues in Q3. The revenues are up close to around 8%, so that's a stock in focus. DCX Systems, one of the big movers in the last 1 year or so, but that one's a little bit under pressure because they're looking to raise a QIP at a discount to yesterday's close price. So the stock in the last 1 year or so is up close to 70%. In fact, it's opened up in the green despite that discount on the QIP. Maybe a sense that the QIP demand is quite strong. And Angel One, highest ever client addition in the quarter, up close to 16%. Profit as well, up close to around 14%. But as we saw yesterday, Angel One, Anand Rathi, there is this big theme that we're talking about. Financialization in the theme. Some of these stocks, maybe in fact, they've run a little bit ahead of themselves, at least going by the stock reactions that we're getting. Because Anand Rathi's numbers were very good. The stock was down 5%. Angel One as well, the numbers look pretty good. But that stock as well, down close to around 8% as we speak. Prashant.
No, absolutely. But, I saw some brokerage sort of notes on Angel One saying revenues are a bit of a miss compared to what the consensus expectation are. So we'll have to maybe speak with the company in a bit. But 35.50 is where Angel One is. That's a sharp cut. It's, of course, been the best performing broking stock out there. The market's recovering. I mean, we're down about 25 points on the index, but this is just the first episode of what will play out today through the course of today's session. And I'm certain that we will see more than, just this one move from the lows to the highs. I think we've got some more left here. 22,073 is where we find ourselves at. Just a few other names which are moving around. By the way, market breadth is still extremely positive. I was talking about public sector companies, right? Look at names like IRFC, 9% higher. IRDA, 3.5% higher. RVNL, 3.5% higher. Nalco, of course, Nigel has been pointing out, 4% in the green. Hindustan Copper is up 5%. Ircon is up 2%. Cochin Shipyard is up 2%. Mazgaon Dock is up 2%. This is PSCs, public sectors, sort of companies which are front and center once again. Others can come and go, which is Reliance and IT and Pharma, like we've seen over the last couple of days. But the one constant leader of this bull market has been PSUs, and there is no stopping there at all. Aster DM, Ekta was telling us about this one earlier as part of the top 10 list, 10% higher on Aster DM. Stocks at about 440 at this point in time. Dredging Corp, again, another PSU name, 6% or so at this stage. Yes Bank is coming up with about a 4% pop. Polycab went up 6% yesterday. Polycab is up another 2% this morning. So that is some of what is coming through in terms of the trading session. So on the downside, I mean, I think, apart from what we already mentioned, which is Angel One, and I think Geofinance, we also mentioned 4.5 lower. Look at Moti Sons. Moti Sons had a vertical rally after the recent listing. Yesterday, it pulled back 10%. It's down another 10% this morning. 8.5%. 197 on Moti Sons is what we have. And something like a RBZ Jewelers, right? Again, something which went up vertically last week. That's pulling back about 8% this morning as well. So yes, I mean, in the broader space, there is a lot of movement which seems to be playing out.
I also want to point out that the entire pharmaceutical space had gained quite a bit, right? Two spaces actually, not just pharmaceuticals, but even real estate. All of those stocks are coming off a little bit today. So just keep an eye out on that. Aurobindo Pharma is down. Alembic Pharma is down 1%. In real estate, by the way, Glenmark Pharma is also under pressure. And in real estate, all these names, Macrotech Developers, Oberoi Realty, Prestige Estates, Godrej are all under. Brigade is down about 0.5%. So I think the market, as the market starts to get a bit cautious, there is a little bit of money being taken off the table. Easy Trip, Motilal Oswal, Balkrishna Industries, Aisha Motors, Nykaa. Nykaa has been gaining a lot of ground, so some money being pulled off over there as well. So not looking great. Actually, the headline index is not reflecting the kind of pain we are seeing in the broader markets because so many stocks, Angel One down 8%, Geo Financial Services down 4%. So, that's not looking good.
Sonia, IRFC, the stock in the last 1 year is up 330%. The current market capitalization is 1.8 lakh crore, and it's entered the top 40 companies in terms of market cap. It's the market cap is more than some of the nifty companies now. So, I think I don't know what to say. At one point of time, maybe valuation-wise, it was in favor. But after the stock is up 350% and it's moving on these sort of volumes, you want to analyze these numbers a little bit more closely and and be a little careful.
I think it's completely bonkers, Nigel. I mean, you've got to say it, right? I mean, almost 2 lakh crores in market capitalization for IRFC. I mean, just be very, very aware of what you're doing. I mean, if you're invested, and don't take it. Stocks don't move up non-stop. I mean, sometimes they do, but then at extremes, I mean, it is better to be careful here with names like IRFC.
And then the government owns 87% also. Yes, we're putting caution on board. The government will say, hey, let's take some money off the table.
Good for the government, but I mean, the point is, if you're a small shareholder,
then you better be careful.
You got to put caution on the table here. With many, actually not just IRFC, I would say many of these names which are moving up. Like the way they have in the PSU space. Gautam Trivedi is with us. He's co-founder and managing partner, Nepean Capital. Gautam, good to have you with us here. Good morning. Thanks very much.
Good morning. How are you?
Why don't we kick off with just a comment on names like IRFC and some of the others in that space, which are now, as we were discussing earlier, more valuable than some of the nifty companies. What's the thought process here?
Yeah, I think the fact is that at this point, a lot of these NBFCs, including IRFC, I think have started to look attractive. They haven't really done that much. I mean, the entire BFSI space really has been a laggard over the last 12 months. So I think I don't have a view specifically on IRFC, but I think that's the view on the NBFC and the BFSI space.
Interesting, because we were saying maybe it's done a little too much, especially IRFC with almost a 2 lakh crore market cap tag now. But I think your comment is broadly on the NBFC space, right?
That's right.
Okay. How are markets looking, Gautam, themselves? Again, I mean, we had a 2-week break and then right back, 400, 450 points in 2 sessions on the Nifty. How are we looking near term?
I think near term is still very strong. The fund flow from domestic retail investors who are obviously first time, a lot of them are first time investors, has been just unabated. You saw December taking in over 17,000 crores in SIPs alone. So I think that momentum from domestic investors is not going to slow down. I don't see any real cause that will make it slow down. And if you then look at the impact it's having on our weightage in the MSCI emerging market index. So we've gone over the last 8 years from 7% to over 17% now. And as a result, if you notice until I'd say about the last quarter of calendar 23, the FPI flows actually weren't really doing much. But as our weight in the MSCI started going up, the ETFs and passive funds have to match that. So as a result, it becomes, in some sense, a self-fulfilling prophecy where money's attracting money. And until we don't see a significant slowdown in domestic flows, and I really, between now and the elections, unless something, a major calamity happens overseas, I don't see that slowing down. So I think the momentum should continue. And FIs will be domestic flows.
All right, the momentum should continue. There are some stocks that are bucking the trend this morning, actually. Aster DM is up 10%, so don't lose sight of that. We were talking about it earlier on the show as well. Volumes are picking up on Aster DM. Yes Bank is coming back, up almost 4% over there. And a couple of these stocks, Polycab, by the way, look at the pullback in Polycab, up 3% now. In fact, I think the low that Polycab saw was somewhere around 3,900 or 3,800, if I'm not wrong. If you just pull up a 1-month chart, around 4,000 or so, and now it's back to 4,300. So there's some amount of pullback that we're seeing in Polycab. Controversy or no controversy, this is a stock that has always been a favorite. Gautam, hi. Thank you for joining us. I wanted your thoughts on the mid-cap space, actually. Currently, the Nifty PE is about 20 times forward, but the mid-cap PE, the Nifty mid-cap PE is about 28 times. So given the kind of valuation discomfort that there is in mid-caps, do you think that one should be a bit cautious? And even if you're taking profits out, it's better to do it now in the mid-caps rather than the large caps?
I agree. I think the fact is the mid-cap, and even we aren't even discussing small caps. I'm sure that PE is even worse, or even higher. But the fact is that I think it's time to probably be a little more careful on incrementally putting new money in small and mid caps because they've rallied so much. In fact, we ran a screen only last week, and this is about almost 1,150 stocks. And we found 784 stocks have gone up 50% or more since their own respective 52-week lows. So that's been the kind of mania that we've seen in mid and small caps. And again, this is across market caps, but mid and small caps in particular. And if you look at the large caps, Sonia, I think your point's very valid. If you look at the large caps, and if you look at some of the stocks that haven't really moved, and you're looking at Reliance, you're looking at a whole bunch of companies, TCS, Infosys, HDFC Bank, etc. They collectively account for almost 50% of the Nifty 50. And their average return in 2023, a calendar year, was a mere 9.5%. So is now a good time to actually think of putting money and playing safe with large caps? The answer is yes.
Hi, Gautam. Good morning. Nigel on this side. Gautam, last year when we briefly chatted, I think in the last quarter, you were telling us that Infosys is not looking so bad at those valuations. It was an underperformer. But clearly these results, the street has got fairly excited on IT. How are you all positioned on the tech space? And would you all play large cap IT or mid cap IT? Because if IT seems to be turning around, we're going to be getting rate cuts and maybe things are not as bad, then the higher delta may come in from the mid cap space. Tell us your view.
Yeah, so I think now is a good time to get back into IT if you've not been in it. So you haven't really missed anything significant over the past about 18 months or so. And if you look at even the post-results sell-side research that's been coming out on the four big ones that have announced so far, i.e. TCS, Infosys, HCL, and Wipro, a lot of these companies are now trading at, so Infosys, for example, a note that I saw for FY26 is now 18 times. TCS is still very expensive with respect versus Infosys. But I think valuation comfort is certainly coming back. we're looking at FY24 most likely ending with a high single-digit earnings growth, but 25 and 26 projections are now going to 12, 13, 14% earnings growth. So I think, yeah, now would be a good time to get back into IT.
All right, good time to get back into IT. The stocks, in any case, have been, surging quite a bit. Numbers have not been that great, but I guess valuations are looking good. Thanks a lot for joining in. Appreciate your thoughts here, Gautam. Well, for the market, it's not too bad, to be honest. Down just about 30 odd points, kind of consolidating around these 22,000 levels. Let's get you another top corporate voice from Davos 2024. Amitabh Chaudhary, the MD and CEO of Axis Bank, expects credit growth to temper down going forward. He was in a conversation with Shireen on the sidelines of the annual World Economic Forum. He adds that cybersecurity has to be one of the top concerns for the banks. Listen in.
Well, if you read what Governor has been saying, it's very clearly RBI is worried about some of the exuberance they're seeing on the credit growth side, especially on the retail loans and specifically on the unsecured loans. I think by increasing the risk weightages, they're giving a clear signal that they do want the market to temper down their growth, to watch for credit risks out there, which maybe they're not watching as closely, and also look at the leverage of some of the borrowers who are being lent money, especially by some of the smaller players in the system, including fintechs. I think the message goes on further to say that we are watching this space. It's not ended here. If we do not see this trend being reversed, we will do something more. What that more would be, RBI has many tools, and what they decide to do only time will tell. At some stage, the deposit growth and the credit growth has to converge. The deposit growth is muted because RBI is tightening the liquidity. That is not going to go away till inflation comes under control. So if RBI is not going to give up on tightening our liquidity and deposit growth is not going to pick up to the extent we want, the credit growth at some stage has to come down. They have to converge. It can't be credit growth just running ahead of deposit growth. So in that sense, I think they're just saying it openly and clearly that this is what they want the market to, how to behave. I think they have also started asking questions on the credit deposit ratio side. Now, every bank has its own context and what their deposit franchise is. For example, in case of Axis, we've worked very hard over the last 2 years to, decrease our outflow rates by 550 basis points because we have restructured our balance sheet in a particular way. Now, that could mean that our credit deposit ratio is slightly higher than some of the others. But we have done something very well on the, ensuring that there is enough liquidity which we have as a bank. And today we are one of the best in class in terms of outflows. So I think RBI recognizes that every bank has its own context, and I think they will react and look at the credit deposit ratio with that context in mind. We have an extremely smart regulator, very proactive regulator. I'm sure they're listening, and hopefully some of these things will converge at some point. But I do expect the advances growth to temper a little bit from here. They're not going to continue at the same pace. I don't think RBI will allow it.
But let me pick up on both those issues. On the credit deposit ratio, you said that the regulator is being watchful at this point in time and will act if necessary. But you're also hopeful that they will keep in mind the context of each individual bank. If that were not to be the case, what would somebody like you, for instance, need to do to ensure that the regulator is not forced to act?
Well, the math shows that if the regulator wants the credit deposit ratio at a certain level, and you can do it for every bank, what it means in terms of additional deposits they have to raise to get to a targeted deposit ratio, and then if they want to grow from there, what additional deposits they need. It's just pure maths. So I think if RBI was to move towards mandating a number for all the banks or a number for a bank, and a different number for different banks, it would mean that everyone has to relook at the balance sheet and then act accordingly on the liabilities and the asset side. I think the regulator will, my view is, will never come out with a number. Right. I think they will guide us towards what they want. They will expect the board to look at some of these things and come up with a plan which will ensure that if things were to go in the wrong direction, automatically the mitigating mechanisms will take care of it and push either the asset growth down or increase the deposits you're collecting from the banking system.
So in light of what has already been said, and there isn't a mandate on a number just yet, but are you starting to approach things differently?
Well, we are looking at a balance sheet because obviously RBI is asking all the banks questions around how you're going to manage this going forward. I think a bank of our size, the kind of franchise we have, I think we can manage some of those variables much better in comparison to some of the other smaller institutions. So we are looking at all our options and seeing what we need to do. There might be some small changes on the increment, but otherwise we do believe that we can meet the expectations of RBI and meet the expectations of what our shareholders expect from us.
the buzzword here, of course, is AI, and of course, cybersecurity is a key concern for banks back home as well, including yours. On both those counts, what is the priority? What is going to be the strategy from here on, specifically for 2024?
So, as a well-known professor has said that Gen AI, everyone will look at Gen AI. The people who will benefit from Gen AI are the people who are creating the platform for Gen AI and the consultants who will allow you to, help you in using that platform. Because all of us are investing in Gen AI and looking at it very, very actively. All of us will get the benefit, but as all of us get the same benefit, customer, might gain from it, but in the sense, will it improve our balance sheet and our profitability? I doubt it. We have been looking at Gen AI for the last 12 months or so. We have actually launched a first Gen AI platform internally. It is not cheap. It is quite expensive. And it is for
How much money are we talking about?
It is decent sum of money because, it does not come cheap. And the way you get charged for it, it's, a simple question could mean you being charged for it multiple times. So, but our view is that no, we have to embrace it because it is a technology which is going to change the world. We have launched it for employees internally where they can ask questions of our platform of any product, service, process, etc. And right now the accuracy rates which are getting are pretty good. So we launched it in about 100 branches. We are working on 8 or 9 other proof of concepts for Gen AI, and I'm sure other banks and other institutions are doing the same. So it is going to be a game changer. My only view is depends on the pace at which you embrace it. If you do it at a very fast pace, and you will make some mistakes along the way, I think you'll get much bigger benefits. If you're just a follower, I don't think the benefits will be substantial because that will become almost essential for you to do business. You asked me about, what are we doing on some of the other stuff which is happening in the marketplace. Yeah. Well, as a large institution, you have to spend on technology and expanding your franchise on a continuing basis. There is absolutely no option whatsoever. And that means that with, for example, cybersecurity added to it, it's a further addition to your technology spend. I believe very strongly that as India becomes more and more relevant to the world, and as India becomes more prosperous, we will start coming under the radar of all these people who are misusing this technology to hack into systems and gain some advantage. We are seeing some, obviously early trends. I think you will see more. So whatever you can spend might not be enough, and you obviously have to keep spending to ensure that you are slightly ahead of the curve. It's not only that. Third is that the frauds in India, digital frauds in India are also rising exponentially. And please understand and appreciate that while we can have a large team which is monitoring it, the people who are involved in digital frauds are doing nothing else, day in, day out, but just trying to find, issues and bugs in your system. So you literally sometimes have to hope that the number of bugs or the kind of firewalls you have put are much better than someone else, so they're going to attack someone else rather than you.
Is this your top concern today?
No, it is. It has to be a top concern for every large institution in India, especially, say, a bank, because cybersecurity, digital frauds is not only has an impact on the reputation of the firm, but the customers who go through digital frauds become complete naysayers because they believe somewhere that the institution could have done something to stop them from falling for the digital fraud. So no, it is, if you were to ask me one of the big concerns, it is one of the big concerns.
Okay, very important conversation there. You'll hear it through the course of the day. For now, let's slip into a quick break. On the other side of the break, Kesoram Industries is in focus. P. Radhakrishnan of the company will be joining in to talk about their Q3 earnings. Later in our Quarter Se Quarter Tak segment, Sonal will put focus on the oil and gas sector ahead of the Q3 earnings. Also, Harshvardhan Dole of IIFL will discuss his expectations from the sector. Stay tuned.
Welcome back. Well, let's get to Kesoram Industries. That's a stock on our radar. The quarter 3 numbers a little bit subdued on the back of a dip in the top line. Their margins were expanded. EBITDA is up close to around 25% on a year-on-year basis. Mr. Radhakrishnan, the whole-time director and CEO of Kesoram Industries, joins us on the show. Hi, Mr. Radhakrishnan. Good morning, and thanks so much for joining in. Well, one question that we'll avoid this time is Kesoram on the block? Because that deal got finished, right? So that's pretty good news. So the investors as well will be looking at the way ahead from here on. Give us a few more details, sir. On the top line, there's a dip. Is there a dip in volumes? If yes, what were the volumes in the past quarter? And earlier you were talking about 8 million tons for the year. Is that still doable, or do you want to revise that number? Focus on volumes first.
Good morning, Nigel. So sequentially, there has been a dip in the volume. We did 1.96 million in the Q2. and we did about 1.76 million in Q3. Yes, there has been a sequential dip in the volume. So our volume, which we should do for the whole year, should be little bit short of 8, maybe 7.6 to 7.7 is what we will be targeting to do from here on.
Okay. All right. 7.6, 7.7. Yeah, because otherwise, if you have to reach 8 million tons, I think you'll have to do a 25, 26% growth in Q4, which doesn't look very, very likely. So good, you're being more realistic on that front. What about the EBITDA per ton? It's hovering around that 600 rupees odd as per your calculations, because I think you pull in the other income as well out there. But could you tell us what is a sustainable number? Is there scope for improvement for Q4? I think you were guiding earlier for around 625 to 650.
So we'll be in line with 625 to 650. That's where we will be.
Got it. All right. Since we're focusing on the cement business itself, what has been the price increase in Q4 so far in comparison to Q3? Has there been any price increase? The reason I ask you is normally post Pongal, you see a price increase that's pushed through in South India, which is one of your focus markets. So how have prices changed, say, in the last 20, 25 days or so?
Not substantially.
Okay. More or less
substantially.
Okay. All right. Mr. Radhakrishnan, good morning and thanks for being with us. Just a couple of more questions on the balance sheet. What is the debt on the books currently? Have you been able to bring down your debt in any way? And what is the scope of reducing debt in the next 1 year?
So 1,800 is the debt on the books. So Nigel has skipped his favorite question when we are going to do the refinancing this time, right? Hopefully we will do the refinancing this quarter.
No, but Nigel also wants to know that if it's 1,800 crores, you've done that deal with Ultratech Cement, how much of this, all of it will go, right, with the cement deal that you've done? So you'll have a debt-free balance sheet, Kesharam Industries, whatever is remaining, right?
Yeah, the subsidiary will have a 200 crore of debt. That's where it is. Kesharam will be debt-free.
Okay, but what happens then? What is remaining in the business? That's a good deal that you'll have, tied up with Ultratech Cement. But what is remaining of the business? I think it's just that Rayon business. So could you tell us, how do you see this business shaping up? In the first 9 months, you've done around 180 crores. You're still a bit lost for the 9 months, though for the past quarter, you almost moved into the black. So how does this business shaping up? Because I guess this is all that's left now.
So Rayon and transparent paper business has got good potential. But for it, it requires some infusion of equity into the business. Debt beyond 200 should not go from where it is. So if some equity, as we have conversed in the past, the tie-up with Futomura, the transparent paper, there is a lot of global demand. If we scale up on the technology, both for the transparent paper as well as the rayon, there is a good potential for a sustainable EBITDA of 60 crores. That's where I look at this business.
Okay. Your total capacity is currently a little under 11 million tons per annum. Just trying to understand, what could the scale up be over the next 1 to 2 years in the capacity?
You're speaking about the cement business?
Yes.
Yes, the cement capacity.
Pardon?
The cement capacity. Can you just give us an outline on what the cement capacity could be over the next 1 to 2 years?
We can add one more kiln there. That's where it is. We got sufficient limestone, and one more kiln could be added in our Karnataka location plant. That's what I can say.
No, Mr. Radhakrishnan, what Sonia meant is, we know that business is going to go out of your books, but you have been running the business for the last many years. So currently the total capacity is around 10.75 million tons on, but it has adequate limestone reserves. So as per you, what can this number scale to, as per you, and also what could be the rough capex that you'll have to incur to scale up to that number? It'll go into better hands, in the coming months, but according to you, what is it?
So about one more kiln can be added at a cost of about 1,500 crores, quick ballpark, right? That's the way I look at it.
So one more kiln can add how much capacity?
So about 1 to 1.5 million tons you can add there.
Okay.
So you can go to 12.5 million tons is what you're saying, right?
Yeah. 1 to 1.5. Yeah.
1 to 1.5, and it'll come at a cost of 1,500 crores capex.
Correct.
Okay. Can you just give us a little more details on what the price increase has been in certain markets? What was it in South? I mean, you spoke about it briefly, but going forward as well, do you see scope of more prices being increased? And if yes, what could the quantum be?
As Nigel observed, normally there is a uptick on the prices post Sankranti, which is yet to kick in. Say 5 rupees, 10 rupees, here and there had been an increase. But prices have to move further for our margins to expand. That's where we are.
Okay. And and when do you see this deal get completed, the cement deal?
So various regulatory approvals are required. So it may take anywhere between. It's tough to speculate at this stage. Probably when we meet next time, we will have a clear.
Yeah, I think every meeting things are getting more and more clear. But final question before we let you go, you said that the EBITDA, sustainable EBITDA number from the rayon business, which you believe has great potential, is around 60 crores. So yes. For FY25, you're assuming the rayon business does an EBITDA of 60 crores. Is that correct?
I would frankly, we have to sit with the CEO of the business on the drawing board. My quick ballpark is basically 60 crores is doable. There are some refurbishment and expenditure needs to be incurred to bring up to the 60 crores. So we need to sit with the CEO. Probably I will come back to you on this.
All right. Thanks a lot for joining in and appreciate your thoughts here. That's Kesoram Industries. In the last 6 months, it's been a super performance that the stock has seen, 140% higher. Today, it's just slightly subdued. It's time for our special segment now, Quarter Se Quarter Tak, where we bring you expectations from each sector. Today, Sonal will tell us how the Q3 performance could be for the oil and gas sector. Over to you, Sonal.
Well, it's going to be largely a sequential decline in the oil and gas sector in Q3. Remember, Q2 was strong for a lot of companies. But let's start with the macros first. Brent prices, they averaged at $83.7 a barrel, which was a decline of 3.5% sequentially. Singapore GRMs also declined quarter on quarter to come in at $5.6 a barrel. Now, how would all of this impact stocks? Let's start with Reliance Industries. Here, the EBITDA is expected to increase YoY by 17%, but it will be flat on a sequential basis. O2C segment would see a decline due to declining GRMs, but it would be offset by strong performance in the retail segment. Now, on to the oil marketing companies, where we will see a big decline on a quarter-on-quarter basis in EBITDA because of higher base. Lower refining and marketing margins will put pressure on earnings. Additionally, Russian crude discount also declined in the quarter. So OMCs could see a decline of 70 to 80% in EBITDA on a quarter-on-quarter basis. GRMs, they are expected to be between $8.5 to $11.7 per barrel, with BPCL topping this list. Now for upstream companies, despite the windfall taxes, decline in crude prices as well, their adjusted realizations have sustained at $75 a barrel mark. And for ONGC, crude output is expected to decline by 2%, while for Oil India, it is expected to increase by 7%. EBITDA, however, will see a decline of 14% for both the companies on a quarter-on-quarter basis. Now, city gas distribution companies, they've seen a decline in LNG prices in Q3, but there has been a hit on volumes as well. So for Gujarat Gas and IGL, only a 2% increase is expected, and for MGL, it is expected to be only 1%. This is for volumes. EBITDA per unit is expected to be flat for IGL and Gujarat Gas, and it will be a decline for MGL on a high base. Now for gas utilities, it will be largely lower as well. GAIL's PAT is expected to decline by 16%. For Petronet LNG, it is expected to be a 3% decline QOQ. And for GSPL, EBITDA is expected to decline by 7% on a sequential basis. Let's talk about valuations now. Oil and gas space continues to be reasonable despite a big run-up seen in some of these stocks. Reliance Industries is trading at 21.4 times. Of course, it does have a lot of businesses. ONGC in Oil India is between 4.5 to 6.1 times. OMCs are trading between 5 to 8 times, with IOC topping that list. For city gas companies, Gujarat Gas continues to be the most expensive, followed by IGL, and then there's MGL. The gas utilities are trading anywhere between 11 to 17 times. This is one-year forward earnings.
Okay, all right. Thanks a lot for that, Sonal. Well, we'll get Manisha to join in just a bit to focus on the commodity markets. By the way, plenty of stocks are moving around, and the Nifty, from being down closer to around 50 points odd, that dip has got walloped into actually. You have stocks like Bajaj Finance. Yesterday, there was some short positioning on that stock. that's seeing a bit of a bounce in today's trading session, currently moving to the high point of the day. Britannia as well is moving up, so that's pretty good news. And the reason the Nifty has almost moved back into the green is because the Nifty Bank has seen a big recovery. So you pull up the intraday chart of the Nifty Bank, now it's up closer around 40 points. Courtesy ICICI Bank, that's the one that's moved higher, and Axis Bank as well. But as promised, let's get to Manisha. She's standing by to tell us what's transpiring in the commodities market. Manisha?
Well, thank you for that. The commodity that I'm watching out for is zinc, and we have seen the prices gain up in the overnight market. It's trading at a 2-week highs right now. So even as other metals are not performing as much, but for zinc, it really is about the individual fundamentals is the reason we saw the prices gain up by nearly 2% overnight, and we are just holding about those kind of gains right now. So flat trades happening for the Indian markets as well. But this is happening after Star came out with a statement saying that they are suspending zinc smelting at the Dutch plant. Now, this plant has an annual capacity of around 315,000 tons per year, and Star says that they are putting this in maintenance until now because it's not garnering any profits for them. Well, remember, Star also had suspended 2 mining facilities in the month of November, also suggesting that it wasn't working out for them in sense of margins there. Now, this is being done because there are higher energy costs. Zinc is already in surplus right now, and these are difficult market conditions, and winters in any case is a period where you have weak seasonal demand coming in. Markets also have seen pressure continuing because of the strength in US dollar. The Chinese central bank meeting that happened yesterday left the rates unchanged. Also, the inventory surplus that seems to be building is expected to continue into this year as well, as per various reports. So if you look at the LME inventories itself, they are at around 2-year highs. And the International Lead and Zinc Study Group says that they have seen inventories at a surplus of 489,000 tons. This is over and above the buildup of what we saw in 2022 as well, at around 156,000 tons. So we have seen last couple of years continue to add more inventories in case of zinc, and this year would not be any different, and you could be looking at higher inventories. We're also already looking at them at a 2-year highs, and that's weighing onto the markets there. If you look at the prices in this year until now, we've seen zinc prices decline by 3% for 2024. This comes in on the back of decline of 14% last year and 16% the year before as well. So back-to-back 2 years of decline, and this year has started on a negative note here. But the outlook as well seems to be stabilizing. Markets do believe that as and when the Chinese demand comes back, and if you see more smelting capacities being shut, that could really give support to the prices. Currently, we're trading at around $2,500, and that is where Fitch, even Capital Economics of Bank of America believe that you could be looking at zinc prices averaging at. A bearish view, of course, coming in from BMI, which believes that the prices could decline further to 2150. That would be very close to cost of production, and that could perhaps be a bottom as well.
All right, thanks a lot for that. Well, getting back to the oil and gas space now, Harshvardhan Dole, Senior Vice President, Institutional Equities at IIFL, joins us to tell us what he expects from the oil and gas sector in Q3. Harsh, thanks a lot for joining in. First, if you can give us your overarching view on what to expect from the sector, and then what are your top picks in the sector this quarter as well?
Sure, thanks. See, I think relative to last year as well as the second quarter, the macro environment was less benign. For example, the GRMs have kind of weakened, and at the same time there has been moderation in the marketing margin. So that will definitely be high on the earnings of the sector, both downstream as well as upstream. I think the positive way to look at it is with respect to what had happened last year, the numbers will actually fare out phenomenally well for particularly the downstream companies. So if I were to take a holistic view, while the numbers may seem to be quite disappointing on a sequential basis, I think given a lower base versus what these companies have been going through, I think the performance should be quite impressive if you evaluate on a standalone basis. On the same thread, I think the city gas distribution companies like IGL and Gujarat Gas will actually report reasonably good quarters. I'm not too sure about some of the other companies who are actually sitting on a very high base of margin. But in general, for CGD, volume should be quite reasonable, and there should be uptick in the margins. So the gas companies actually stand out very well in the third quarter. Reliance is basically a very peculiar case whereby the O2C business is likely to be weaker, but that will be more than offset by strength in the E&P as well as the B2C segment.
Okay, I wanted to talk a little more about Reliance actually, because the stock in the last 1 month has gone up 10%. and you're expecting it to be a flattish quarter this time around. But do you think that the consumer businesses, which have been growing at a very steady clip, right, both Geo as well as the retail space, do you think they could continue to gain traction, assuming more importance in the numbers this time and perhaps giving it that incremental upside?
Well, that's what we are hoping, that festive season should have gone reasonably well for them, and there are traction in the subscriber additions as well, for which both Geo and retail should continue to deliver the way we are forecasting. On a sequential basis, we are, for example, retail, trying to pen in something like 3 to 5% on a sequential growth, which assumes linearity in terms of sale and flattish margin profile. So hypothetically, if the operating leverage kicks in, there is a good chance for an upside surprise, which is what we'll keenly await.
Okay, a good chance for an upside in Reliance, which is what you're looking at. All right, gas utility companies, a quick word on that. GAIL, Petronet LNG, I think you mentioned it briefly, but do you think that the margins would normalize this time around? What are you expecting in terms of the operational performance, and what can we look forward to on the stocks?
So GAIL in particular is not a simple direct play on LNG because it has got quite a few moving parts. The core business, which is the natural gas transmission, will do quite steady with 3 to 4% volume growth and benefits of tariff revision. Where we are unsure about is the commodity business, the petrochemical business, because the margins have actually come off the cliff. Even on the sequential as well as YOY basis, margins are down in double digits. So we are hoping that the company is able to source gas at a much competitive price and throw some surprises. Otherwise, the much of the weight lifting will be done by the LNG trading business, where GAIL has constantly been surprising the street, and which has been the sole reason for the earnings upgrade.
Okay, that's on GAIL. Go ahead. Petronet LNG, you were saying?
Petronet LNG, again, it's, as of now, just 2 terminals operating. And I think the benefits of lower natural gas prices should start accruing to them, which is reflected in the terminal utilization. And therefore, the earnings that we are forecasting are, close to about 4% on a sequential basis, which to me is quite reasonable.
Okay, finally, a word on these standalone refiners like MRPL. Do you expect a hit on their profitability as well because of the lower GRMs that we are seeing quarter on quarter?
Of course, there will be an impact on the margin profile of the standalone refiners. And given the fact that their earnings are very sensitive to the underlying GRMs, there will be volatility in their earnings. And that is the reason why, as a house, we've always believed that the best way to play the whole refinery theme is by owning the integrated players like HP, BP, and IO, which actually remain our preferred picks in the sector.
Okay, Harsh, we'll leave it there. Thank you very much for joining us and running us through your expectations for the quarter from the oil and gas space. Thanks indeed. The market's picked up pace quite a bit. We're down just about 8 points. I think we have maybe the rates on Jyoti CNC coming through the new listing in just a bit from now. I think in the pre-open, it has ended about 11 or 12% higher. There you go. We'll have the listing at 10 a.m. and then the management will be with us to talk through the numbers. Angel One is down a full 11.5% now. Stocks at about 34.46. I mean, the losers list is pretty much similar from where we started, of course, with new names now. But Moti Sons is down about 8%. There is Nykaa, which is down about 2% or so. Syngene, some of these names were not there in the mix earlier. Syngene is down about 2.5%. And there are others, Capacite Infra and Avanti Feed, etc., which are also taking a bit of a knock. I think Nagaraj Shetty is with us of HDFC Securities to run us through what he's making of the trade so far. Down and then back up, absolutely flat now. Nagaraj, what would you do?
Yeah, of course, the short-term trend of the Nifty remains positive. We have seen sharp upside breakout in the last 2 sessions, and Nifty is currently showing consolidation. I'm not expecting any bigger decline from here. Any consolidations is going to be a buy and dips opportunity. I remain with the upside target for the Nifty is around 22,200 to 23,300 levels, where the couple of resistances converge, Fibonacci extensions converge at the higher levels. And at the lower levels, 21,950, 22,000 is going to be the support for the Nifty in the next one or two sessions.
Okay. Well, I just wanted your thoughts on a couple of these stocks that could be in focus as well. HDFC Bank, of course, I mean, you may not want to comment on it, but nevertheless, I'll ask you about it anyway. Particularly for banks, how is the situation looking? HDFC Bank's numbers are today. There's ICICI Bank later in the week. Do you see traction picking up here, or are you cautious?
Yeah, of course, Bank Nifty has witnessed a sharp upside bounce from the 47,000 levels and currently showing consolidation. The overall chart pattern is looking positive, which is suggesting a possibility of decisive upside breakout from here. I'm expecting Bank Nifty to move further, even as well as the large cap banks to move further from here.
Okay, that's on large cap banks. Any other stocks that you're looking at? Because there's some profit taking that you're seeing in some of these technology names. Of course, they've been the big gainers in the last couple of weeks. By the way, that's Jyoti CNC. Just look at that, 14% higher. Very, very strong listing coming through for that company. So we'll get talking to the management as well in a while from now. As of now, let's let them enjoy their moment in the sun, the listing of their company. Very, very big move coming in. Their volumes also picking up on Jyoti CNC. It was expected to be a strong listing, and there you have it, 17% higher. Before we let you go, a quick word, Nagraj, on the IT stocks. Anything that you still like there?
Yeah, IT, Infosys and TCS are looking positive. What we have seen a sharp upside bounce in the IT sector, as well as currently they're showing minor consolidation. Over the period of time, this Infosys and ITC are chartically looking very positive. They are placed at the hurdles. I'm expecting this upside momentum to continue for near term.
All right, we'll let you go on that note. Thanks a lot for joining in. We'll take a quick break. On the other side, the Dalal Street debutant, Jyoti CNC, will be with us. Param Krishna Jadeja, who's the chairman and managing director of the company, will be on our show.
Welcome back. Mr. Parakram Singh Jadeja is Chairman and Managing Director at Jyoti CNC. That is the latest sort of company to make its D Street debut, and it's a fantastic debut. Mr. Jadeja, good morning. Great to have you with us here on CNBC-TV18. Prashant this side. And congratulations on what is absolutely a great listing. Now now that you are in the market, you're in the listed space.
Thank you very much.
Good to have you with us here, sir. Now that you are in the listed space, I mean, you'll be able to talk more freely about what your ambitions are and quantify them, sir. I was just looking at what you've done in FY23 in terms of revenues and what you've done in the first half of FY24. If one annualizes the first half numbers, we're basically looking at about a 10%, little over a 10% growth in FY24. First, sir, could you tell us if that is the broad number in terms of growth, both in 24 and more importantly in 25? Should we expect any acceleration here? And second, on margins, where we've seen a substantial improvement to about 14.5%, what's the steady run rate margin which we should expect into FY25 as well? Go on, sir.
So, thank you very much to you and all of our new set of investors. The way the people have put up a faith on us and on the vision, I'd like to say thanks to, first of all, to all of you there. And in terms of, let's say, the growth trajectory, let's say what you look in last 3 years, and now the beginning is, let's say, we have a very robust order book, and the way we are going to be execution commitments are like that. We're looking to be furthermore in terms of a revenue growth, as well as margins also to be there. Basically, margins will going to be improved basically based on the today's our capacity utilization will improve from 50% to this a little bit higher number in 24 and in 25 itself also there.
So, if you could put some numbers to it, sir. You said both will improve. So, steady state revenue growth, what should we expect? Around the 15%
so basically, I'm
number?
Today on a cooling. I'm right now. Absolutely right. I'm right now in a cooling zone. And in the next 3 weeks, you will see the numbers, and that will make you very positively impact and positively happiness to be there to all of you there.
All right, Mr. Jadeja, good morning and congratulations
Very soon you will
on the
see
listing.
the numbers there.
Sure, sure. If you can tell us, more than 60% of your business comes from two verticals, right? Autos and the aerospace division. Just trying to understand what is the scope of growth in both these spaces, and can you just to get back to the operational performance, is there scope, since both these spaces are growing in a big way, is there scope to increase your operational performance much more from here? I mean, you're almost sitting at 15% margins. Do you think you have such any more operating leverage to build on to these?
Absolutely. Today, our let's say the utilization level at close to 50%, and the plant has capacity to be close to 4,400 machines, and there is a room to increase with the minimum bottleneck removal going to reach out to be a 6,000 machine in next 1 year time over there without spending much on a capex, and then that's all this capacity utilization will come. So all this kind of utilization will come. Definitely this margin also will be improved, and in terms of top line also will be improved.
And in the defense space and the aerospace division, can you tell us what is the order book right now by the end of the first half of the year or Q3? What is the order book, and what is the kind of order visibility that you have over the next 1 year?
Yeah, so basically today out of this 3,300 crores of our order book, the 1,900 crores order plus orders are basically from the aerospace and defense. And multifold we are looking in this order book in the next coming quarter to be there. There is a big pipelines we are seeing. All the way the words are moving towards to more and more on modernization, on a digitization, all like that. And in aerospace and defense, and now upcoming market also in India called as the EMS. That's also we are growing. We are looking to be a further more growth to be there.
Okay, all right. Hi, Mr. Jadeja. Congratulations on a solid listing. But now, in fact, the responsibility is on you to deliver some good numbers to justify this. So let's focus on a couple of aspects. As you said, you're in a cooling off period. But I want to understand, with the current capacity that you have, what is the peak revenue potential? I'm just doing a back of an envelope calculation. It suggests it could be around 1,350 to 1,400 crores. You could clarify on that, the peak revenue potential. And also, since you can do some debottlenecking and increase the number of units from 4,500 to 6,000 units, what is the capex that you'll have to incur for that?
So basically, it's to reach out from the plant as such a way is built. So from 4,400 to 6,000 machine, there is not much capex are required. My teams we are working on that. It's a very minimal capex are required, not much over there, and we are going to reach to close to a 6,000 machine based on 25 numbers there. And in terms of let's say the total revenue size, okay, the plant can generate, okay, once we reach out to total model mix and capacity, we'll reach out to be close to 2,500 to 3,000 crores of a capacity to be there.
At 6,000 units, you can do around 2,500 to 3,000 crores. That's the peak potential, right?
Yeah, that's the peak potential.
Once you come out of this cooling period, sir, we like more details from you, but we appreciate you joining in, Mr. Jadeja, and giving us all the details that you did tell us. Wishing you all the best and enjoy the day. It's been a good listing. For the time being, though, we'll slip into a short break. On the other side, our special segment, It's the Economy. Lata will connect with Samiram Chakravarti of Citi India, as well as A. Prasanna of ISEC, to decode whether the RBI changed its stance post the December CPI numbers.
Co-powered by